I'm not going to assume that I'm good. Excellent. All right. So what I'm going to try to explain here is getting it back to basics, getting back to like how you should start trading before learning any indicators, any other trading systems. It's very important to learn the trend. It's one of the more overlooked things. Like people want to nail the tops, nail the bottoms. I'm telling you, all that shit doesn't matter. You don't have to be nailing tops, nailing bottoms. It's always great to do that, but really the consistent profitability is in understanding what price action is doing and why it's doing it. So in trading the trend, I would very much argue that the trend is created by people that have larger bankroll than we have. And they set the trend after they're done buying or after they're done selling. And we could just take this kind of reversal that we have going on here as an example of what happened with trend on the daily. So if we look at the closing price, and that's what's important, is the closing price is what determines trend. The wicks, I don't care about the wicks. Like the wicks there is the wicks there, I don't care. But what is important, you look at the close right there, and this close right here, it actually closed slightly higher. That actually gives you a higher high. So you have a risk of closing a higher low. And this happens on all time frames. Here's your low close. You have a lower low close, and now you have a slightly higher high close. Then you could be on the lookout for maybe there's going to be a higher low. And those that have deep pockets that buy up this market, that have accumulated all in this area and in this area, they want to sell it back to you way up there. And how do they do that? Well, they have to change the trend. They do so by closing prices at various levels. You have a higher high close there. And as soon as you closed a higher high up here, like here, I could almost guarantee the algorithms went crazy and said, okay, we're in an uptrend. That's a higher high. That's higher low, higher high, higher low, higher high. And it'll just keep doing that. So the robots kind of keep the trend going for the people that are rich that bought here. The robots will mark up price for them so they can sell it at a profit. And they know they can do this just by pushing up price to here. The rest just happens automatically. Then I would argue that this happens on all time frames. On different, we call them composite man in Wyckoff, but it's generally the people that have a lot of money that are pushing the market kind of to do what they want it to do and when they want it to do it. When they're done buying, they'll put in an uptrend, and then the computers and algorithms, the bots, they'll all just start buying it, making them make money. So we can focus on what's been going on here. On a daily trend, we had price closing, higher lows, higher highs, higher lows, higher highs, higher lows. This was the same low. But look what happened here. You closed lower. And anytime you close lower, you could look for a lower high close. Boom. And then you have this little dancing party. And what did you have off of that? I mean, you could often expect a retrace. I kind of expected an ABC back up to right here myself. But hey, it went up and it just kept going. I think I took some profits there, but it's kept pushing, so I kept buying. And I think I'd said that in the Discord. I was like, nope, today you buy. Just keep buying. Screw it. Because the robots, the algos, they don't care. They don't care if price is overbought. They don't care what the RSI says. If price is pushing up, they're going to push up along with it. And they're not even going to think. They're just going to keep buying. until there's no more money left, and then they have to start selling. So now, similar to what we had over here, like I don't know what the count was, but you closed a slightly lower low. Right here, you closed a slightly lower low. So you're at risk, same as here, of a lower high. Lower high. Come down, grab this liquidity. And that's, I'm not looking at what the Elliott wave count is. I am not looking at what the RSI is saying. I'm not looking at any other indicator. This is just based upon the closing price where these market maker people are pushing price for whatever reason. They closed a lower low. We could have a lower high coming in. If price comes up here and closes above 25, then that's putting in a higher high, and then you expect a higher low, and you will continue, most likely. And this doesn't just apply to the daily. That's the beauty of it. You can apply this to every time frame. You can go down to the 1 hour chart. We're just looking at Litecoin. Litecoin had a great setup. LTCUSD. Dang it. Mm-hmm. We're on Coinbase on the 1 hour chart. This is what I look for quite often for a trend reversal. And it's very noticeable. You have the low, you have a high. And right here, you closed a higher high, higher low, higher high, higher high, higher low, higher high. You have higher high, higher high. Here's your low. Now you closed a lower low. What comes next? Lower high. And you can see the measurement between that and that is very similar. So you have a trend reversal there, a nice distribution, up thrust, back test. That's a great sell setup. And it works with the trend because on a 1 hour on a 1 hour time frame, you closed a lower low. So you're at risk of closing a lower high. So you can put your stop loss up there. If you get stopped out and it closes up there, buy it back because you have a higher high. You're going to put in a higher low. Keep the trend going that way. And this is very basic, just trend, just based upon closures. And you can mix this with your Elliott wave counts to say, hey, what is price doing? Is this going to be an ABC and it's going to go up? Well, because price closed lower, I'm on the lookout for this lower high. That could have been an ABC, and then you push up for 5 waves. Like, well, okay, your stop loss gets hit, and you're looking for 1, 2, 3, 4, 5 up in to go up. So now we've got the downtrend in Litecoin. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low until right here. You closed a slightly higher high. So we should be on the lookout for a higher low. Stop loss goes back down here at the wick. If you get stopped out and it still closes higher, re-enter. Put your stop loss at that wick. Because you're going to lose a little bit here, re-enter, and you gain a lot because you have all this liquidity. And that's just based upon trend. And those that have a lot of money, they're going to push the market to do that. There's a reason why price closed above this. Because they want to change the algorithms to buy the dip and push up. Because somebody was buying this, now they want to sell it in this area or higher. Maybe they're just reaccumulating and they mark it up further. I don't know. But what I would look for is an ABC up. And if that is all you get, take this liquidity, and that's just an ABC. Then at your rejection point, you want to see on a 5-minute time frame, you want to see a lower low, lower high, lower low, and then it's going in your favor. If the price action goes up and it's still making higher highs, higher lows, there's no short setup to be had. You're trending up, 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 up. So your Elliott wave count will no longer be an ABC because you didn't start making a downtrend. And I do this all the way down to a 1-minute chart. Who's that?
That be looking into long once it retraces to 1-to-1 ratio, right? Like the same distance, like you said before. But if you wanted to play that short in case it goes and you don't want to miss out, would you play that or not really? Because as you may have noticed that we have kind of a double bottom setup right there. Like a lot of people trade that, and it could happen, it could not, but kind of looks like
Okay, I'm zooming in. Your double bottom is valid because we took out that low, liquidity was taken. So I'm good with that. That's your stop loss. Trade it long. And only because the trend right now is closing a higher high. It's closing a higher high. That's telling you there's no question that, like, there's no disputing it. You can say ABC 5-wave move. It doesn't matter in this context because you're saying there's where it closed before. There's where it closed now. There's no dispute, no argument. That's a higher high.
so.
This would be a higher low until it breaks down to here. Then there's your sell. If it closes down there, only if it closes down there. If it wicks down there and closes here, that's a buy because that was a liquidity grab and you're going up because the trend is starting to close higher highs, higher lows on closing price action on this time frame. That's all good. Hopefully we caught a lot of that. Excellent. We got it all. So you're using, let's go back to the Bitcoin chart because love me some Bitcoin. It's something we were just discussing here on Bitcoin trading very, very low time frames because I trade the 1-minute chart quite often as soon as the trend tells me to do so. And usually my trend indicator for me is a 15-minute chart. And I look at things very, very differently than most, I would say. My higher highs and higher lows, very subjective, but I'll trade them and I'm okay with them. So here in a 15-minute, here's my previous highs, here's my low, closed a higher high. So that's a higher high. I'm expecting a higher low. There was right here a 45-minute order block. I look on all time frames for these order blocks, but there was one right there. Lo and behold, price wicked right into my orders and came up here. I actually shorted here because I wanted this liquidity and I'd made it halfway there. I didn't actually get it. And I was looking on, I do believe, a 5-minute time frame. And I was looking very close at these closures and it was closing higher highs, higher lows. So I entered again right there. But those were my entries earlier. Let me turn this to a 5-minute chart and I'll show you, or a 1-minute chart. Let's go down to the 1-minute. 1-minute chart of today's price action. Don't know what day we are, February 20th or something like that. After the FOMC news, FOMC meeting minutes came out and we had a little, who knows what, I don't care. Was it a triangle? Was it a B wave? I don't really care. What I care about is the trend. This is where I entered. Price went up. As soon as price closed above here, you could have bought that again because you're trending up on a 1 minute chart. You're making higher highs, higher lows on a 1 minute chart. Still making higher highs, higher lows. Every time I enter, my stop loss is at the previous low. So if I entered here, my stop loss is at that low. If I wanted to enter here, my stop loss is at the previous low. If I wanted to enter here, my stop loss is at the previous low. Just a swing low on a 1 minute time frame. And every time price goes in my favor, I can raise my stop loss, minimize my losses. And I can keep doing that over and over. I do believe I had a buy setup right here that I posted earlier. That actually went up. That was good. Came down again and gave you another buy setup. Why is it another buy setup? Because you have a higher high, higher low. Stop loss is still right there. Very tight risk. If it comes and stops you out and closes back up in there, then that becomes your stop loss. Keep trading it up as long as it's closing higher highs and higher lows. That's all I'm looking at here. Buy that. And here we have a change in behavior. So out of all of these 1 minute time frame buys, this is a change in behavior. I'm out. I'm out of all those trades, and I could look to potentially short it because I have a lower low close. Stop loss goes above here. And looking for an area to take profits. I mean, the daily open at 24,184, that's a good area. This liquidity, that's a good area to take profit. So that's the valid sell setup because it's closing lower and lower. If it does a liquidity grab, a wick, and still closes lower, that's even better. Then I know to put my stop loss there. And it's trending down. The trend did not change. You had a wick, no change in trend. We're going for this liquidity if that does happen. And that's how I trade the trend on very low time frames. And I think that those that have money are pushing price to do this. They're pushing price to tell the computers, to tell the algorithms, hey, start buying this, so that they can take anything they bought here and they can sell it here on all time frames, on a 1 hour chart, on a 15-minute chart, on a 1 minute chart. It doesn't matter. There's algorithms trading every time frame. There's so many of them out there. Take advantage of it. See how this works with your trading system. See how it works, helps you out with invalidating or validating Elliott wave counts. I think it's very valid to look at that. Trading patterns, head and shoulders pattern, I find that they are more valid when they work with the trend. So if you have an inverse head and shoulders pattern, say you have, take this one, for example. If you had this as an inverse head and shoulders, I would say that is valid because these closes were higher than these closes. That validates the setup for me to buy the pullback and expect the one-to-one extension of that pattern. So that helps with trading patterns. It helps with trading Elliott waves because you started closing higher. So your inverse head and shoulders pattern is going with the trend. That adds confidence to whatever you're trading. This is Elliott wave. This is triangles. I think there was a triangle back 2 weeks ago. I stayed with the 15-minute trend and kept me in the right direction. Let's go to that real quick. 15-minute. We were in chop zone from what I remember. Where was that? I remember trading the 15-minute trend. Oh, it was right here. La 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 la. So I had a 15-minute trend here. This closed slightly. That might not have closed slightly lower, but this certainly closed lower than that. You had a lower high. So you're trading the 15-minute trend down. The 15-minute kept me in the right direction of the trend. And this whole thing just looked like a weird, what is that? I don't know. Came up, but it didn't close anything higher. It didn't start an uptrend for me. So I just kept selling it short. Made profit on that one. Came down to target. I don't know, like trading the Elliott waves, trading whatever system you're doing. I think looking at the closing price, it helps you stay in the right direction and not be off sides. Because you could have said, "Oh, there's a three-wave pullback. Oh, with an extra +1," and then, "Oh, with more and more," and you would have just, "Oh, this is just three waves." Just no, and then it just keeps going on you. And I've had it happen to me before, but now that I pay attention to trend, it's like, okay, maybe, but it didn't start a change in behavior. Right here was maybe it was about to, but it didn't break these highs. So I'm like, we'll see what it does. What did it do? Came back, made lower lows. I was like, yeah, there you go. Keep selling it. I guess watch the video, give me some feedback on what you guys think, and see how it helps you with your trading. No, because like once you get your stop loss has to be tight. I mean, so like if you were to look at this as closing lower, your stop loss is right here, and you could start looking to short as soon as liquidity is taken and see if it goes. If you get stopped out, don't force it. Like, where can I see this? This. I could have seen this as three waves here and +1 there, +1 there. I could have tried to buy this. Would have gave me a little bit of profit. Cool. But it would have stopped me out. And it really kept trucking. So if you are going to trade this trend idea, you have to get used to stop losses. You have to get used to stopping yourself out, getting stopped out. Just take the small loss, especially when learning to trade something that you're not used to trading. And there's a learning curve to it, and just see if it's applicable to your system. But no, I haven't seen any real. It just seems like it's the way to go. Trade with the trend. The trend is your friend. I'm sure we've all heard it before, and it just seems to work. Um, yeah, we can take that right off of here. And so if we are trading this trend, this closed a lower low. I would have been inclined to sell this right here, but I would have got stopped out. But so say we are looking at this trend. This grabbed this liquidity, moved down, closed lower than my wave 4, previous wave 4, whatever, but it closed lower. So I'm looking for a potential lower high. I am short, or trying to short, with my stop loss at the wick high. I don't want it to go any higher than that, because there's no reason to go higher than that. If it is, the market's going to go up. So I'm short from there, stop loss at the high. So there's one wave there, some kind of three wave. There's your ABC. This, I will take 25% profit standard at the 1-to-1 extension of an A, B, C. What does it do after that? I don't know. But I know I locked in profits, 25% of that position. And I would also standardly move my stop loss into break even. So there's no loss on that trade, and I leave that position open, see where it goes. If it comes back, stops me out, I gain 25%, break even, stop loss. I'm good. And then, of course, as a trader, we're always looking for more trades. I saw this as an up thrust, grab this liquidity back inside. Now my stop loss can go here. I can also re-enter as soon as this comes back in the box. My stop loss is there. And now I'm looking for 1-to-1, taking 25% of the new position and probably closing out an extra 25% of the first position at this area. We had another box here. Stop loss goes there, came back inside the box. And I always compound my positions. I add positions until the profits are pretty substantial. They get to be pretty decent. But this is like full-time day trader type of thing. But I'm very quick to take profits. Give me any reason to take profits. Hey, I'll take some right there. That's 3 waves for me. Or on the bigger 3 waves, I'll take profits there all day long on a short. Heck yeah. And then, I mean, if you want to get even bigger than that, you have the take profits down there at another 3 wave. Look for reasons to close 25, 35, 50% of your trades. In my experience, from what I've seen, the most consistent traders, the most consistently profitable traders are the ones that are closing like 50 to 60% of their positions with a very small move. And they're making, their daily wage or whatever, and they leave the rest run and they don't care what it does. And that's how I usually am with my positions. So my take profits are very, very quick. I mean, even if I have a small position, I have $20. Well, that's my $20. I don't care. Give it to me. If it doubles down again and it gives me another sell and I get down here, now I have another $10 from that position and $20 from that position. I'm taking out 30 there. So there's $20, $50. There's $50 right there. And now I'm compounding that all these positions. Now I'm taking out $100 down there, plus those two, $150, something like that, And you do this over and over.
What's your bullet size for your entry?
Depends on how close my risk is. So like I was talking about it earlier, we had a risk versus reward of $12 or something like that on the Bitcoin chart locally on a 5-minute chart, I think it was. No, it was on the 1-minute chart. So if I was to buy the uptrend on the 1-minute chart today, right there. I don't know what that is. Okay. Entry price right there, 24,265 entry. Stop loss is 24,233. So there's a $30 difference there. So I would enter probably a half a Bitcoin right there. And there's a 30 odd difference in price. Just trading this little 3-wave move right there. So my stop loss is right here. My entry is right here. And my first take profit is at the 1-to-1 of that. So I could take a 25% off right there. Give me a reason to take a profit. I'll take a profit. And then if that high is broken, I'll add right there. I'll just buy it back. And then I'll take that as a 3-wave move. I'll take profits on that. And then I'll take this as a 1, 2, 3, 4, 5. And then I'll close out all that right there maybe. But I would definitely have closed on the 1-minute time frame right here. This made a lower low close than before. That's lower low. What do we get? Lower high.
I have traded the 1 minute before, but it over the weekend it drove me crazy. I was trading the 8-minute this morning, and I did basically what you were doing. Was when after a pullback, I entered and I moved my stop up, and
Yeah.
once it hit the indicator that I use, saying we're at a top, I took half my position off the table, moved the stop up to where I would be happy, not just below a lower high or whatever, but where I would be happy. Like if it comes back, I've made some money, I'm good with it. Not caring if it pulls back and then I can find another entry on the 8-minute, then great, whatever. But I was seeing some divergence on the 8-minute on BNB and stuff, and I thought if this reverses, I want to cut it. And that's what I'm going to have to do. I think after my hedging issues over the weekend, I'm just going to have to be happy with trying to cut it at break even or small stop loss, because my hedging thing
that's what I do.
was probably
I don't do hedging.
Yeah.
I can't understand the hedging. It doesn't, like, for me psychologically, it doesn't make sense to be trading against myself. So I don't do it. But like weekend trading, I think it's fine. You could find your trend on a 1-minute. This is still higher than that. So you buy there. Oh, you're trending up. You buy there. You buy there. You could buy there again. You could buy there again. This is a valid uptrend all the way until right here. And it closed the lower low.
It wasn't so much the issue with hedging, it was the opening and closing, and the fees added up to more than closing it out at the initial loss, because you're opening and closing the position all the time, like trying to close it. And it was like, I would have been better off just leaving that position either open and waiting for it to come back, or just closing it at that loss. So yeah, I'm not going to be doing that anymore.
To me, it doesn't make sense. I don't do it. I don't understand you guys that do try hedging. It's just
I tried it. It was an expensive lesson.
I tried it. I thought I was smarter than the market. I tried it before, years ago. Ugh.
Well, after my weekend debacle, I decided I went back to isolated trades, not cross trades, so I can't hedge anymore. And that way, it means that my only risk is the first bullet I fire. If it comes back and gets stopped out, that's it. It's not going to take back more than that. And then if I want to fire another bullet, my first position has to be positive with a pullback, and then I'll fire some more and bring my dollar cost average up, and then I'll go from there. But that's going to minimize my initial risk until it goes the way I want. So I need to change the way I enter and exit, and that means regularly, as you're suggesting, taking profit off the table in intervals. Then that's been my issue. I've been waiting for an entire move before I took it, or it would come back to my entry point and stop out at break even or a loss.
Yeah. So trading Elliott Wave, this is something that I started when I traded Elliott Wave, was expect it to be at ABC all the time and just take 25, 30% at the 1-to-1 extension, raise it to break even. I got stopped out of a lot of trades that could have ran way farther, but it made my trading much more consistent. I didn't have my equity curve like jumping and then dumping and then jumping and then dumping. And implementation of the stop loss, just knowing my clear and validation, because we're in a market and you have the fear. It's always driven by fear. Your fear of losing your money. You're afraid to lose it, so you panic. It's very emotional. Like the market triggers your emotions. So you're afraid to lose money. You're afraid to miss out on some miraculous power move. But I explain it best in talking about Tesla. People ask me, "Hey, did you catch that Tesla trade?" I was like, "No, that was the monster trade of 2021, and I didn't catch it." I mean, should I beat myself up about it? No, I wasn't looking at that chart. I was freaking trading crypto. Could I have made so much profit on it? Yeah, so could everybody else. But I missed the move. I totally missed it. Am I hurt by it? No. If I wasn't in trading right now, I would have missed the move of all this stuff. Every trade that I make every day, I would miss those moves. So we're offered the opportunity to enter and exit into the market, and you shouldn't be weary or afraid that you're going to miss the big moves, because I guarantee you're going to miss the majority of the big moves in just about all markets. So if you can be consistent in just getting repetitious setups that give you profits consistently, your account growth will be exponential, and you don't have to rely on those big moves that you're afraid of missing out on. It's like, oh, I don't want to miss the moves. Like, yeah, I don't care. There's going to be a move tomorrow or next week. I don't care. I mean, the markets, as far as I can tell, they're going to keep trading for the next little while. So I'm not afraid that, oh, this is the last trade I can put on. I'll catch another one next week. I'm not worried about it.
Yeah, I've since today, yesterday, today, one of either or. I've decided I'm going to be closing constantly as your motto, I think, take your daily profit. Because
take your damn profit.
I want $100 a day, every day. Maybe not the weekends, but I want to make it up as an average of $100 a day, so that I can essentially pay myself, pay the bills, all that sort of stuff. Consistently do that. My issue was trying to find my sweet spot in times to trade. If I'm trading the 2 hourly, it'll give me either between a 10-hour trade and a 48-hour trade. But if I'm constantly moving my stop up and taking profit, entering and exiting, based on a smaller time frame, then I'm still going to be making money on the way up as well, and my risk gets reduced because I'm constantly moving that stop, rather than having it come back all the way, which is what kind of happened recently. There was a trade from the top. Let me get a price. Hold on. So from BNB, the 326, 328, which was on Thursday afternoon for me, Thursday morning for you guys. That was my short entry. And then it came down to 303. And that's where I should have hedged, because that was, my indicator didn't say sell, but the way it came back up, it just took, majority of it all back. So that's, if I was going to hedge, it needs to be in profit, and that's where I should have been. That's where I needed to hedge, and then just waited it out.
So,
and I'm looking for another down in BNB.
Yeah, and I would totally agree there, but the hedging doesn't make sense to me. If you were to have taken right here, sell right there because you had a potential downtrend, you grab this liquidity with that wick, there's your stop loss. So as soon as you had profits, I mean, you're good in profits right here. Close 25%. And then I don't care what the rest does.
But my indicator wasn't like, sell, or stop, take your profit. It was like, it was short. It's got some more down from the 328 that I just mentioned, as a matching leg, now down from where we are, because I think BNB's pretty much close to its top, and then a big matching leg up, for the prior leg up. So 318. It won't go past 318. There's a real
maybe
resistance.
it doesn't, like, you got to think of this liquidity. I mean, you're at least going to
Maybe,
get these liquidities, but I would grab all this if I was the market maker. So
maybe,
if
but I
you were
don't think
still
it's going to
in
break the
that,
top.
it doesn't matter what you think. I've been in markets long enough to not care what anybody thinks, even myself. So you have liquidity here now. So price action could come up there, stop you out. You have to be okay with that. Your stops at break even, explaining like what I was just talking about, like take some of your profit, stop and break even. You should still be looking for sells if you want to short this thing, but trying to trade against yourself, you're trying to take your own money basically. So if you are going to hedge, just close the whole damn thing out. Just close it out.
I'm not. Yeah, no, I'm not. I'm not in a position anymore. I closed my my long just earlier today because I didn't like how it was coming back on the 8-minute. It looked like it was getting ready to reverse. And so not in a position anymore. But yeah, I'm not hedging anymore. I'm gonna just take the daily profit. If it's there, it's there.
Yeah, if you're swing trading, it's something different. But as a day trader, you're taking your daily profit. But look at this box. This grabs this liquidity, close back up in the box. That might be a massive long.
Yeah, and then you look at the previous leg up, that big green one. That would be your next leg up.
Yeah. What if it does it now? That could go just like that.
It could, but
here's your ABC.
I don't like it for just yet. I mean, I could be wrong, but
so the way I would look at that is if this comes up here, grabs this liquidity, comes back down, and then breaks above that, it's going. It's going to do this again. So after the liquidity grab, price should run away from the liquidity grab. If it doesn't and it keeps pushing, that means it wants for liquidity. And once it takes that, it's going to have a nice little bear capitulation, if you will. You know, that's the way I would look at it. But yeah, I would definitely like to see this leg match from here and just go, and then just pop, fuck you, and then up it goes.
Yeah, and that's what I'm thinking. And then the next target would be 360, I think. So down to 290-ish, somewhere there, and then up to 360.
Yeah, so a lot of people like this is the thing about picking tops and bottoms that I don't do. I don't really care to pick them, but I'll match that leg and then I'll expect one more hit. If it gives me a reaction there, I'll set a stop loss there and I'll buy it like right here. And it usually forms a box of some sort, and it'll give me my box. Tight stop loss right there. Take profit as soon as it breaks the highs. You take half probably, and then see if it keeps going for you. Like if it comes back and finds support at the highs, you could re-enter there. Stop loss will be, you'd probably have somewhere to give yourself a stop loss along the way.
Yeah,
that's probably the way I would create it.
And that way of thinking, the way the matching legs and stuff like that, has got me doing that a lot more. And a lot of the time, it's been playing out, which is why I've started doing it like that too.
Like market symmetry.
Market symmetry. Yeah, and I sent a couple of similar things to Jim recently, where he was like, "Oh, I think it's going to come up," and my matching leg was coming down exactly, where it basically ended up. I think it went a little bit shorter than what I thought, but it was because of the market symmetry, which made me think that's what it was going to do, and that's why I was short for that leg that down that Jim was like, "Oh, it's going up."
Yeah, these matching legs, they can add to your trading quite a bit, and people don't usually see it. They're usually looking at for 5s and 3s and stuff like that. Whereas now I kind of look at everything as 3s. So you might have this as a 3, and then have this, just to really screw around with people. Just do the same thing again. Like, oh, this is resistance. And then it'll just be building liquidity up here. so that when it does sharply come down here, it's gonna frickin' moonshot. I don't know. That's why I'm big on taking profits. As soon as it breaks an area, any area, you take profits because there's liquidity here.
Yeah, I dropped an image in the crypto anything chit chat message thing. Have a look at that. That's basically what I drew, which is basically what you just drew.
Okay, let's check it out. I'll check it out in a second. So at the break of it, well, the meat of it's in the beginning. So if anybody sticks around, they'll get extra meat.
Oh, sorry, I didn't realize you were teaching.
Where are we at on the recording? 30-minute. Okay. All right. Well, we're almost done here. So my big thing of the three waves, taking profits because you're breaking a level, and the market makers have to take on those positions. So if there's a bunch of stop losses here for the sells, those guys are buying. And as soon as they're buying, the market maker is immediately taking on those buy orders that the market has. So now he's long, so he has to sell those, which brings the market down, which stops out these guys, which he takes on those orders, and he's got to bring those orders up there. And you just take profit here, then take profit here. So the market maker is just moving from liquidity to liquidity and flipping orders. And as soon as he takes on all those orders, he's got to put them somewhere. You know, those are all the stop losses and stuff that the buybacks, I guess. So he has to take on the sell. He has to take on the opposite position of those buys. So now he has to get some profit that way, get some profit that way, some profit that way. You know, the market maker can do this over and over and over. And if you watch price action, I mean, sometimes you're amazed, be like, wow, they actually pushed it all the way to that level. Wow, they did it. Yeah, they did, because they had to incite some kind of reaction. Mark Douglas had a video. I think I posted it, but it's like he explains it very explicitly. Like, yes, there are people that are long the market, and they want to offload it, but there's not enough liquidity to sell into from here. So they'll actually buy up the market here, hit those stop losses, and then start distribution from there, because you have people that want to buy the dip. So they'll just keep selling into that demand to offload all their position. And then as soon as they're done offloading and there's no more demand, it all got filled, price drops after that. Happens quite often, especially in crypto. I mean, crypto is just rife for that. It's made for it. All right, let's see what we got in the anything to chit chat. Yeah, exactly. Let's make it happen.
And it was your stuff that I've heard you say before, that just made me think, that's basically what it's going to do. So yeah, that's what I've started looking at. And you're right, those are all threes. It's a 3 inside a 3 inside a 3 inside a 3.
Well, even your 5, you can get 3 waves out of a 5 wave. Have you seen those?
No.
Do you have a good 5 wave that you know of on a BNB chart? I don't trade BNB, and I haven't. Well, shoot, we'll call it right here. That's a 5 wave up on that 4-hour chart right there. You've got a 1, 2, 3, 4, 5. It's perfect. And that actually doesn't illustrate it very well. So my guess is this is the first wave up of BNB making another leg up.
That was the big massive low after all the FUD that Binance had about all the exchanges not being viable and all that, and that's where it came down real hard.
There's a 3-wave there. There's a 3-wave there. A, B, C. And then, with that ABC, 3-wave, 3-wave. So everything's
Oh,
three.
yeah. Yeah, I've done that similarly with some other moves inside the recent mess. It's all
Yeah.
threes. I mean, even that what looks like it's a three, it's 3-bar run or whatever it is down at the 328, whatever it is, where it might be an extended fifth. I mean, that looks quite remarkably like a WXY or something like that.
Yeah. This is all the more reason to take your profits at a 3-wave move. Just take something. I mean, sure, it could run. Let it run. Let some leave some on the trade for it to run, because like I have massive trades that were just like, oh, I took this and I took my profit here, and then went to sleep, and then woof, I wake up with way more than I expected. Like I'll make a couple $100 on this, and then oh, here's $2,500. Here you go. Like, oh well, thank you. Holy crap! Because like during that consolidation, I was trading this little small consolidation, so I was over leveraged. Like on Bitcoin, I was over leveraged trading for this type of a move, because I was just trading these little small choppy moves and leaving some on. And it's just okay. I made my year. I mean, what the fuck? I'm good. I mean, it could be.
That's
Like,
where
people say you're lucky, but it's like you set yourself up to be lucky.
That's where I added to my position. Now, in hindsight, I wish I added more, because it was like it's just accumulating.
Mm-hmm.
Oh well, shit happens.
After taking out that liquidity there, and it was just.
But that was the fear in me. It's like, what happens if it goes down?
Oh yeah, totally. I would have liked this liquidity to be taken. What the heck? The market actually left that. This is knowing the pair that you're trading. Like on Bitcoin, I would have expected that liquidity to be taken. Bitcoin usually takes its lower liquidity. It leaves its upper liquidity, but maybe BNB, maybe it doesn't. I don't trade this pair, so.
Well, yeah, BNB doesn't really do once it sets a resistance. Sometimes even if Bitcoin goes up, like the 318, right up on the top right hand side, that didn't really get broken, even though Bitcoin went up above 25,000. That just stayed there. That was like a hard resistance there. It just didn't do it. Ethereum went up, Bitcoin went up, BNB just didn't do it.
Jeez.
And then you've got the opposite, where Jim took a short one time and BNB pumped another 3% or something like that. It was just crazy. And I was short for that. And it's like, because it looked like it was going to go down, and it just went back up. But anyway, you get back to your teaching. I didn't realize you're doing that. I just thought everyone was hanging out.
We're kind of hanging out, teaching at the same time. Yeah, I took a similar short to Jim. I think me and Jim were chatting about that right at, I wanted 19,400, so it was up a little higher. Yeah, right there. So I had a sell set up right there. It actually gave it a little bit. But that was my last sell setup. Oh, come on. Hold on. No, give me my.
When you sell partial and then buy back, how do you buy it? Do you like market buy it, or like you usually wait at a certain retrace?
I have different ways of entering markets. It depends. I'll show you that in a second. So let me explain to you this. 19,400 was my sell setup. It was like right there. And as soon as that stopped me out, then all my sells were invalidated, because this high was broken with that. So I would have expected it to reject after grabbing this liquidity. But since it came back and pushed again, I flipped long immediately. And this is where a stop loss is so helpful. My invalidation was right at 19,400 after this came back inside the box. As soon as I got stopped out, I lost, I think, 30 or 40 bucks. I immediately flipped long. And I had some longs from down here still open, but I took a lot of profits up here and I tried to short and hoping that all these get stopped out, but they didn't. They made me a ton of money. But I was going to
Yeah,
short that down, stop all
that's
those out,
where
grab this liquidity.
that's where my mindset would have been like, oh damn it, I missed that entry. Whereas, I should probably start thinking about the way that you trade is like, well, the next stop is up here, and just do it because it's so far away. The risk to reward, your stop is just there under that
Yeah,
previous low, and I just got to
yeah,
think about it, like that.
yeah. Because I these are like a double top. It's like, okay, that's just liquidity. Liquidity gets taken, and then it comes down. That's what I was. That's where my mindset was. I was not expecting massive bull run, but hey, they freaking happened. So after liquidity is taken from there, the price has no reason to keep going unless if it's searching for much higher liquidity. So that's why
Yeah.
you
So,
immediately know that you're wrong, get stopped out, and flip.
so when you flipped, where was your stop?
It was as soon as
Back
that was
there.
broken, right there, stop right there. I mean, it was.
That's what I
I
thought.
wasn't playing around with it, and it just kept going. And then I kept raising my stop, and I entered again. I think I entered again. I was driving while it was happening. I'm like, God damn it, come on.
So how often do you move your stop up, and to where?
Every time it moves up. Like
Yeah, but
I don't like giving profits back. Why would I give profits back?
what time frame were you trading that? The hourly, the 15-minute, the 4-hourly, what?
I want to say I was on the 1 minute, 2 minute chart,
Oh wow.
probably. Well, yeah. I mean, why wouldn't you be? Like my invalidation was very, um, it was right frickin' there. There's no reason to think anything different.
Yeah, fair
I'm
enough.
sorry for taking so long, Viva. I will get to your question in a second. But yeah, let's see if we can get this on the 2 minute chart down at the.
Yeah.
Oh, where is this? We're the 13th.
Yeah, unfortunately, I can't watch it like that, especially days I have my daughter.
All right, we can't go back there. We can only go back to 20K on the 2 minute chart. But I mean, yeah, the invalidation was there. So on the 19,400 sell setup, I think I made it to 425 or something like that. Came back down inside the box, and as soon as it breaks that, my sell idea is no longer good. You could flip long, and stop loss is right below the previous low, because if it takes that out, then you're looking at a potential downtrend going on, and it was just a double fake out liquidity grab up, and you lose 20 bucks. That's the way I usually trade trade those. But Viva. So for me, the way I enter a trade today, I set the orders on a 45-minute order block down here. I set my orders right there. After it came down, it gave an engulfing candle right there. This is a valid buy setup for me if it comes back. So I set orders to buy there with a stop loss at the low. And then I was doing something else. I don't remember what I was doing at the time. I was checking out a job that I have to do. But yeah, came down, touched my orders, came back up in there. It's like, okay. And then I was taking a break from doing that. And I looked at the charts. I saw a sell setup and I shorted that. But I still had that position open. If it gets stopped out, it gets stopped out. Cool. But this position, I'm not going to take profits until the 1-to-1 up there. But the way I normally would trade, like the box, the way I usually trade my box, I market enter. But if I see an order block, I will put limit orders in. But if I'm trading the box, I have to market enter that. So that resisted the box, but now it got up inside, closed a 45-minute candle inside the box. I can buy that and stop losses down there. So I'll market enter right there. Profit, first take profit is at this liquidity.
So you don't wait for any
So,
retrade, just enter as soon as it closes?
Often I will, yeah, because I know my risk. So I can enter as soon as it closes back inside the box. I know my risk is this much. So how big is my position size? It's whatever this distance right there is equal to risking 1% of my account. So the tighter you can make that, the better. But often, if it goes inside the box and I'm too busy to care what's going on, I've traded this so many times that as soon as it makes it inside the box, that's my setup. Take it. Stop loss is here. So for that trade setup, for this entry, my first take profit is at liquidity. And for this entry that I took on the 45-minute order block, my first take profit is here on that position. It kind of gets complicated, I guess, to keep track of, but that's the way I do it. So this position, I keep all my trades like separate. Like this is a trade, and the red one is a trade. This one goes to this take profit, and that entry now stop loss is like up here now, because if I want price to go up, I don't want it to come back inside this box. If it comes back inside this box, I'll immediately sell that and shorten and stop loss at the high, and I'm expecting the bottom of the box. And I do it without even thinking about it now. Like I've traded it so many times, it's like a reflex. Like I'll look at it and just be like, yeah, it's going that way. Here's my stop loss. If I get stopped out, I lose $20. This one, I probably would have lost $50 if I had to be honest. That's kind of a big distance for me.
Yeah, I was gonna say
I would have. Where is that? 24 to 26 to 36. That's $400. So I would have had a half of this. I probably would have taken a quarter size Bitcoin position, immediately market enter a quarter of Bitcoin. If it comes back down to here, I'd enter another. Stop loss is still here. So then I would have a half size position. If I get stopped out, I'd lose $100 probably. That's probably how I would trade it. I didn't actually trade that. I would have if I was watching the box, but I was already entered here, and I had another setup here. I don't know. I was kind of busy today, so I didn't trade all the move up, but I didn't need to trade all the move up. I made plenty of money on this little move right here. I made my day. I'm good. And I still got some of it running, so if it comes back, stops me out. Good on you. Okay, you got me. Now, what's the setup? The setup would probably be this as an ABC, and look for this, and sell that, and go down for the rest of that move. That's probably how I would trade that. Where is it going? I don't know. I honestly don't know, and I don't need to know. As a trader, we don't need to know. What we do need to know is the trend. And now we have an engulfing candle. It's going to print in 15 minutes, 45-minute engulfing candle. What do we got on a 30-minute? 30 minutes. 30 minutes already got it. There's a buy setup right there. That would be a buy. So a 30-minute. Let's market. See if we could do it in time. Horizontal ray. We'll mark it right there. 30 minute. Now we go down to a 15-minute. Do we have an uptrend? We do not. We do not have an uptrend. How about a 5-minute? Yes, we have a 5-minute uptrend. So now I was looking at this too. I didn't think that it would work. I had my box there. And I was looking at it. I was looking at that as a buy, like almost immediately. Stop loss right there. It didn't make an uptrend, but yeah, it was a box. I probably would have entered that right there. 2445, 55 area, somewhere around there. My stop loss would have been 2440. So I'm risking $15 worth of Bitcoin. So I could have put on a whole Bitcoin on that one. And it already made target. So you had liquidity there, double top. That's still a buy because you're still aiming for this liquidity. Now it took it, and there's your take profit. Something like that. ABC. Good enough. And now we have a 30-minute kind of order block thing. So I don't know, you got a 1, 2, 3, 4, 5 maybe. This comes down in 3 waves. You could buy it back again. Stop loss would be there. Because if that stop loss is taken, it's probably going after that one. If it's going after that one, then you're looking at this going near. You know. You do have low, high, higher, low, higher, high, higher, low, higher, high. As long as you don't close a 5-minute below here, it's still higher, high, higher, low. Stop loss there. Bounces up, raise your stop immediately, and see if it goes anywhere. Maybe it just gives you a little bit, and happens all the time. All right. Let's cut the recording there, I guess. Yeah, that was a pretty good session. I like it.